Come here, come here, come here. I want to tell you something. Almost all business loans that get denied are denied for reasons that you can easily fix and turn around and get approved. As a matter of fact, most small business owners think that their business loans get denied because of things like their income or their credit score not being high enough. And although that is sometimes the case, nearly 9 out of 10 applications that are denied because of the big banks are done because of about 10 deal killers, things you can easily change that once fixed make you considerably more lendable, more fundable, more appealing to lenders. So during this training, I'm going to decode these 10 deal killers and teach you exactly how to set up your business the right way so you know you have the best chance of getting approved. Just fixing any of these 10 will make you considerably more lendable and help you get the most money for your business at the best terms. We got a lot to cover, so let's dive in. So small business loans and deals and denials. So your business obviously needs money, right? But when it comes to getting money, it's not an easy thing. As a matter of fact, a lot of business owners that you'll talk to try to get money from big banks like Bank of America, Wells Fargo, even the fintech lenders like Rapid or On Deck have a hard time getting approved. And here's why. What I find is that if you know exactly what any lender is looking for before you actually apply, it's pretty easy to get approved, right? If you know exactly what the criteria is for approval, you can make sure you meet the criteria, then you apply and you get approved. But if you don't, then you oftentimes get denied and never even know why, then try to go to other lenders and other programs running into exactly the same issue. So the key here is prevention. The key here is to prevent your actual loan application from ever being denied. And the key there is to understand what lenders and credit issuers are looking at, because once you get in their head, once you decode their secret formula, then it's like an open book test. You can make sure that you meet all the criteria before you even submit any kind of application and actually apply. So your lender wants to be assured that you're going to pay them back. This is the most important statement I will ever say on any kind of live stream or any kind of presentation. It's the one thing lenders care about. So whenever you apply for any kind of financing, you always have to keep that in your mind. The main thing, the reason they're asking you for documentation, the reason they're verifying all these things, all the reasons that lenders do what they do is for one purpose. They want to issue a legitimate loan to a legitimate applicant. We'll talk about why that's a big deal in a minute. And they also just want to make sure the loan's paid back. So that's the main thing that lenders and credit issuers are really concerned with, especially if you don't have business credit. If you don't have a history of your business paying its bills, if they can't pull a credit report for your business and see that you have this big track history of paying your bills as agreed, then it becomes even more important that they look at these other characteristics to try to determine if you'll pay them back. Do you have collateral? Do you have something to offset the loan, the risk to the lender when they're actually issuing you a loan? How's your personal credit? Does that reflect that you're paying your business bills or pay your personal bills, since there's no business credit showing you pay your business bills? What's your cash flow like? How do you manage that cash flow? How do you manage bank accounts? So these things are commonly looked at to determine how fundable you may be in lieu of having other things right. Now, these things are important. We'll talk about this during today's training, but you've got to get these other 10 things right, because if you get these other 10 things right, then that's really what it comes down to, is fundability. That's what makes you more fundable, and that's where the emphasis and importance of your personal credit, having collateral, and having really good cash flow and tax returns, it's just not that important when you can show the lender other ways that you're not that much of a risk. Okay, I can't hear. Hold on one second here. All right, let me pull myself in here. Mute mic. All right, hold on one second here. I have an issue. Cam audio. Okay, ATR microphone. Yep. All right, give me 1 second here. Okay, remove. Stream. All right. Can everybody hear me now? Can you hear the audio now that I have? All right. Any audio yet? Hey, it's John. Can't hear. Okay. Can you hear me now? All right. I'm going to get out of this really quick here. Mute, unmute. All right. Can everybody hear me now? Yes. Okay. All right. Just wanted to verify. Everybody can hear me? Can you type yes real quick, and if you can hear me, and let me know. All right, so I think everybody's okay now. All right, so let's go back to the beginning here, because I think everybody had some audio issues. Okay, so kind of get back to where we are. There's a lot of reasons that you can easily get financing, but a lot of business owners don't know about these that prevent them from getting denied or prevent them from getting approved. So the key is to really understand, get in the lender's head and figure out exactly what it takes to get approved for financing, and then meet that criteria before you apply. Now, this is called fundability, and when you get it right, things like your personal credit, your cash flow, how you manage your cash flow, your collateral, they're just not as big of a deal. So when we talk about fundability, it's really your business's ability to get money. It's that simple. Okay. And a lot of the power's in your hands. It's stuff you can easily prevent. You need to know about the 10 most important things that get applications denied, because this isn't your credit score. It's not your cash flow. It's not whether you have collateral. It's really based on very basic elements that show lenders that you are actually legitimate and that you're actually responsible and capable enough of paying back the actual loan that they'll give you. So a business starts with no credit profile. Okay. Therefore, what's on the application is very important. And let's think of it like this. So if you're applying for a loan and you don't have any business credit established, man, all they have to go off of is what you're putting on that application. That's why everything that you put on that application is going to be scrutinized the way that it is, because it's not like they can just go pull your business credit profile and see 15, 20 trade lines, which is what you want to build. But if you don't have that right away, then what happens is they don't have that credit profile to show that you're actually going to pay them back. So they start looking at these other application aspects instead. Your application has got to be very strong in order to get approved. And again, when we look at the statistics, half of businesses fail in the first 5 years, 2/3 in the first 10 years. And so again, depending on the statistics, the bottom line is the majority of businesses fail. Lenders are concerned about getting paid back. If they don't have a credit history for your business, then it becomes really important that they start looking at these other factors that will actually get the deal killed because of what you put on the application. So first of all, let's just look at your business seems to be too risky, the industry that you're actually in. Now, a lot of people ask me about high-risk industries, and we've got a lot of training on our YouTube channel, youtube.com/credit suite, that teaches you about what industries are high risk or what industries aren't high risk. But what it really comes down to is that you don't want to put anything in your business name that indicates that you're in a high-risk industry. If you do this, then what happens is it shows lenders and credit issuers' computers that you're in a high-risk industry, and it throws up a red flag on your application. That's what's important here. Just because you have a red flag on your application doesn't mean you're going to get denied. But sometimes it does mean you'll get denied, or sometimes multiple red flags go up, and that is enough to push it to an actual manual underwriting review. Think about this on credit cards. You see this all the time. You apply for a credit card, they give you an instant approval, tell you your limit, you're good to go. Or they send you that dreaded message that you'll hear by mail in 72 days. What happens? Well, what happens when you get that message is that they send it to a manual underwriting review. And then a manual underwriter is looking at this, an actual person, a computer spit it out and said, there's all kinds of problems with this application, all kinds of red flags. It's pretty rare for that person to ever approve you. That's why almost always you get that dreaded message in the mail that you got denied, right? So in order to prevent that, you've got to actually come in and make sure you don't get those red flags. This is one of the red flags, showing that you're an industry in oil and trading or finance companies, ammunition, weapons manufacturer, bail bonds, check cashing agencies, political campaigns, X-rated products, amongst many others, can indicate you're in a high-risk industry. So let's give us as an example of what not to do. Now, we knew this going in, but we have an ability and we understand fundability really well. So we still put the word credit in our name because we know we can overcome those battles to still get the money that we need. But Credit Suite gives us a lot of problems. Having the word credit in our name, I can't tell you how many lenders, credit issuers, merchant account providers that have actually not approved us or given us a hard time because they think we're in consumer credit repair. We even explained it. We don't even deal with consumers. We only deal with business to business. We only deal with businesses. It doesn't matter. So there's a lot of problems that will come when you actually have an indicator that you're in a financial services industry or any of these industries in your actual name. Now, I'm not saying to lie about it, but what I am saying is instead of calling your business Chico's Bail Bonds, you might just want to say Chico's. Because when you put bail bonds in the name, it automatically throws up a red flag, and enough of those red flags is going to get you denied. Plus, a lot of lenders and credit issuers just won't lend to certain industries. But again, think of it like this. The computers are determining the industry you're in. In a lot of cases, they're picking it out of your actual name. So don't put anything in your name that indicates that you're in a high-risk industry, because in doing so, that alone can actually get you denied. So, but if your business doesn't need to be called Jennifer's Check Cashing, then just call it Jennifer's, for example. Again, the key is to determine what you want to do. If you want to have a name that's specific about what you do, Credit Suite, you can tell we deal with credit. Well, then you could go down that road, but it's a way harder battle to get the money you need. Or you could do a more general name, resulting education or consulting, etc., which just makes it considerably easier for you to actually come in and get approved. Now, speaking of this, you also need to make sure that your records are consistent. Look, the number one reason that applications get denied with banks is because of fraud. because the majority of applications, it's estimated that over 80% of applications that come into a bank are not legitimate. They're fraudulent applications. Now, we saw this all over the news with PPP loans. There was all this money, even talking about $1 billion, like plus of actual money that was actually processed through in fraud. And it was at least millions, if not tens or hundreds of millions that actually went through PPP that wasn't legit. This is what banks deal with all the time. So how do they fight fraud? Well, what they're doing behind the scenes is they're taking your application and they're comparing it to all this other information they have about you just to see if the information is congruent. If the application doesn't match with like Secretary of State records, well, that's a pretty good indicator that your business isn't legit. Like if they go to your Secretary of State and they can't find the business name, address, and phone number that's on your application as the same as what's in Secretary of State, that's a big red flag. So this is why almost 8 out of 10 applications at banks are denied, because they think it's legit. They don't think it's legit. They think it's fraud. And they think it's fraud because what you're putting on the application doesn't match Yellow Pages, doesn't match your website, doesn't match your social media pages. It doesn't match all these other places that your business is listed online. It doesn't match your bank statements, your tax records. So whenever you change your address, your phone number, your business name, you've got to make sure that it's consistent. And a lot of business owners make this mistake, for example, when you set up your business. You set up your business in your Secretary of State, then you get your address, then you get your phone number, and you don't go back and change the address and phone number. 9 out of 10 business owners that we deal with have the same problem. When we go to their Secretary of State, Secretary of State record is not the same as what's on their application. Think of it like this. How many times you move a business or change something on your business, or you go to your social media like Facebook or Twitter and you realize it's completely outdated? I don't know about you, but once in a while I go to the About Us on Twitter and I'm like, what were we thinking when we wrote this? Like, it's not even congruent with the rest of our messaging. We forget about that stuff. So you've got to make sure that this stuff is consistent and congruent. And if you're applying at one bank, you need to make sure what you're putting on the application is congruent with the other banks, because all banks' information goes into something called the SBFE, or the Small Business Financial Exchange. They're all openly sharing your information. So you apply at Bank of America and say your revenue is $350,000. Then you go to Wells Fargo and say it's 325. Then what happens is when you go to Wells Fargo, it throws up a red flag because they can actually access Bank of America's information, seeing you just applied for a loan there and that you said your revenue was different than what you told Wells Fargo. This is what's happening behind the scenes. And most people don't even know that the banks are all part of this third-party organization, the SBFE, and they're all openly sharing information. So online records, offline records, bank accounts, licenses, tax records, you've got to make sure that all of this stuff is congruent. Your business name, your address, your phone number, it needs to be exactly the same on all of it as what's on your application. If it's not, well, that's the number 2 deal killer, and it's going to get your application actually denied. Lawrence says, if we have the existing business with a high-risk industry, what should we do? Well, we'll talk about that in, I think, point number 3, so I'll get to that in just a minute. Corey says, I have a business named CMG Business Solutions, but I'm also looking at a secondary name as CMG Business Finance, and my bank was like, is this for taxes, credit, et cetera? So what happens... Let's look. I want to read this message because what Corey described is something we all overlook, and it's a major problem. So Corey says, look, I have CMG Business Solutions. That's perfect. That's exactly the name that you want. You start going down a slippery slope when you say CMG Business Finance. Now, what he says is, I want to name it CMG Business Finance, and my bank asked me, what was it for? Taxes, credit, et cetera. Here's what's really happening. Your bank is trying to categorize what industry you're in. I want to talk about this in the next point. And when you don't know exactly what your own industry is, your own NAICS code, they're going to put you into one of these buckets. Once they put you in one of these buckets, taxes, credit, et cetera, that shows up on your LexisNexis credit report. It shows up in all these places on your business credit reports. Then what happens is all these other lenders and credit issuers start thinking you're in the wrong industry and start treating you as high risk. I'm going to show you how to prevent that in just a moment. Now, John says, should I change the name since I've already started my business? It's up to you. You know, but the bottom line is, if you have something that indicates you're in a high-risk industry in your name, you're going to have a harder time getting money. Now, you got to decide. We decided we're fine with that. We're going to fight that battle, but you've got to make that decision, whether you want your clients to better understand what you do or whether you want to make yourself more of a lending risk less of a lending risk and more fundable. And John says, hey, you have to take care of your info like you take care of a baby. Yeah, you really do. It's that important in the business world. So number 3, your EIN, your SIC, your NAICS codes. A lot of people have asked about this. Let's talk about it. First of all, you need to set up the right entity for your business. Stay away from sole proprietorship. You really want to go with a corporation. You can do an LLC, you can do a partnership, but corporations are looked at as the most credible entity when it comes to actually getting money. Okay, and it also helps you reduce your liability. I'm not an accountant, I'm not an attorney, not legal or accounting advice, but it does reduce your liability. As a matter of fact, if you look at the liability of an audit, okay, the IRS audits a sole proprietor 1 in 7 times, and they audit a corporation 1 in 50. So it gives you an idea of how important it is to have the right entity type. Okay, you want to make sure you set up the entity and get an EIN number from the IRS. You could be a sole prop and not have an EIN. Nobody's taking you seriously in the lending world if you don't have an EIN. So you need to get that EIN number. It's like your social security number for your business. It's very important for the IRS and other agencies to recognize you as actually being legitimate. It's very important for that purpose. Okay, you also need to decide your own NAICS and SIC code. SIC code's not that important. That's outdated. It's like the standard industrial classification code, okay? That used to be like 16 categories. But as you know, things have expanded, right? Now we have e-commerce and the internet, and all of these things have happened over the years and decades. Now what happens is they have this new code called an NAICS code. And you've got to know what this NAICS, or North American Industrial Classification System, you've got to know what this is. Otherwise, what happens is exactly what Corey described here. Hey, I went to my bank. They asked my industry. They said, are you in one of these 5? And the reason is because you don't know what your NAICS code is. All of us should, and very few of us do. Okay, so let me give you an example here of what I'm talking about. And this is very important because this is where a lot of things go wrong. So if I go to NAICScode.com and I go to, let's say, find your NAICS code. Now, normally, let's say you're in real estate. You go to your bank and you say, they say, what kind of business are you setting up? You said real estate, right? I'm a real estate investment. Well, the minute you say real estate, you might think that that's, that's pretty basic, right? Real estate right here. Here's the category for real estate. Here's the problem. If you open up real estate, you'll see there's 32 subcategories of real estate, 32. So if you don't tell somebody what your exact industry and industry code is, just like Corey's describing, they will just put you in their own bucket. No big deal, right? But it is a big deal because now you've learned banks openly share information with each other. The business credit reporting agencies are taking this information and putting it on your credit report. All these lenders, the LexisNexis has it. All these lenders and credit issuers are seeing now the wrong NAICS code, and there's all kinds of problems. First of all, lenders will look at you and put you as high risk because you're in an industry you're not. The credit bureaus, Dun & Bradstreet, Equifax, Experian, they have what are called comparison scores. They literally compare you against other people in your industry. One of the main reasons that NAICS codes and SIC codes were created to begin with is so the IRS can categorize your business expenses. So if I'm an accountant, then what happens is when I file taxes, the IRS looks at my expenses that I'm claiming, and they compare me to other accountants to see if like it's in line with what other people in my industry are doing. So there's all kinds of problems if you're seen as being in the wrong industry. So what John's describing, I went to my bank, they asked for the name, I told them the name, they said, what industry are you in? What he should have done, and this is just an example, but if he was in commercial and industrial machinery and equipment rental and leasing, well, let's say he's not, because that's a long name. Let's go here to activities related. Let's go to residential property managers. Let's say you're residential property manager. You don't want to say you're in real estate. What you want to say on an application, what industry are you in? I'm in residential property management. My industry code is 531311. When I'm applying for a bank account, it's what I do. What industry are you in? My exact industry is residential property managers, and that's code 531311. So by knowing this exact description, I don't leave it up to chance. I'm telling them, here's my code. Here's my exact word for word description of my industry. Way different than telling them you're in real estate. Now they got to decide between which of these 32 subcategories of real estate you're in. And think about it. I'm using real estate as an example. You could name an industry and drill it down here and see there's a lot of subcategories to every single industry. So you've got to clearly understand what your NAICS code is. SIC, not that big of a deal. Now, you don't want to be dishonest and lie about it, but again, you ultimately have a lot of choices. So think about Credit Suite as an example. What do? We're an education company. We're a software company. Everything we sell is software. We're also a financial services company. So there's really 3 industries we could choose. Knowing that, we eliminate financial services because we eliminate financial services because that's high risk. Now we're down to education or software. Well, software is the best for us for many reasons, including it gives us the best multiple whenever we go to exit the business, if we ever go to sell. And it's not seen as high risk in most lending situations, so we choose software. Now we got to go find our exact category, subcategory of software that we're in, and voila, we're off. We're not misleading anybody, right? But again, that's the whole purpose of this, is that ultimately there's sometimes 2, 3, 4 different industries you could kind of classify yourself as. You got to be honest, but you got to pick the one that actually classifies you as the absolute lowest risk. And Loopy says business name is MetaPay Systems problem. No, that's not necessarily a problem, but you could be categorized in the financial services category just because you have pay in there, just so you know. Okay, Lawrence says, I put my real estate industry under real estate doing subdividing land and improvement. Is it still a high risk? All real estate is high risk because it's seen as financial services, just so you know. Hey, you and I are in the same bucket. We're in financial services. Okay, and Corey says, I should have done that yesterday because I know my code. Yeah, you got to do it. Because every time anybody ever asks you for the industry, this is what they're actually digging for, just so you know that. Okay, you've got to make sure that you have any necessary licenses. There are vendors out there that help you build business credit like Granger that will give you a $2,500 credit line just because you have a license. So if you can get a business license, get a business license. It makes you look more credible. Some sources will approve you just because you have a business license. It's something that legitimate businesses have, and ones that aren't legitimate don't necessarily. Okay, your business address issues. So let's talk about this. You'd want to stay away from a P.O. box and a UPS address at all time. Right now, virtual addresses are in flux, meaning that we're starting to see a shift where they could be an issue in the future with a lot of lenders and credit issuers. But today, having a virtual address is still the best alternative solution to having an actual physical retail location. And then under that is a home address. So let's look at the category. Retail location. You have a real physical retail location building. Best case scenario. Second option, virtual address. Regis, DaVinci, Alliance, they all offer them. You can go to creditsuite.com/virtual and get one. Third option, home address. Problem there is, having a home address as the business address obviously doesn't make you look really credible. The other problem is that Dun & Bradstreet's experimenting with putting Google Street Views of your location on your credit report. We've seen more than one people freak out because a picture of their house is on their business credit report. Something to think about. No-go zones, P.O. boxes and UPS addresses. Under no resort can you use those. And there are services out there like iPostal that are absolutely those kind of mailboxes, and you don't want to use them. And here's why. They're all categorized into a database that lenders, credit issuers, the government, everybody knows what they are. The minute you put one of those addresses on an application, it throws up a red flag stating that you're actually using a mailbox address instead of a real location. And a lot of lenders and credit issuers do not like that at all. It almost always results in an immediate denial. So that's a pecking order of addresses that you absolutely want to choose and what you want to stay away from. And again, some things that you want to keep away from completely are the P.O. boxes and the UPS addresses. So not paying attention to business phone numbers. You need a phone number for the business. Never use a mobile phone or a home phone on an application for credit as your business phone number. You can use a voice over IP number. Stay away from Google Voice. I have no idea why, but a lot of credit issuers in the business credit world do not like Google Voice. We see more people denied with that than any other kind of voice or voice over IP service type, voice over IP service. So I would stay away from Google Voice, but never use a mobile phone, never use a home phone. Get a business phone number, make it toll free, use Freedom Voice, use Ring Central. There's a lot of them out there. If you can get a fax number that's your phone number, doesn't cost a lot more, do it. We stopped seeing applications denied for that into last year, but again, not a bad idea to have a fax number if you can. And you also have got to make sure that phone number is listed with 411. This is one of the basic checks that lenders and credit issuers look at, and here's why. You can't go to 411.com and list yourself. As a matter of fact, 411.com is not even 411. There's no way you can go to 411 directly and list yourself. There's one company, and only company we've ever found that will list you with 411 called listyourself.net, and there's a fee to do that. Now, again, if you're a Credit Suite client, we pay for that for you. It's not something you have to pay, but that is one way around this. But you got to make sure you're listed with 411. Why is it such a big deal? Because if I start a business today, I'm not going to be in 411. And a month from now, 3 months, 6 months, maybe even a year from now, I'm not going to be in 411. Now, eventually, as I start to show up on Yellow Pages, on Google, on Bing, on Yahoo, 411 will organically pick me up naturally. But this is like a deterrent. It's like a way that lenders and credit issuers spot the newbie businesses they don't want to lend to because they're not listed with 411. We see a lot of credit issuers in the business credit space look at this one basic requirement. We see a lot of lenders behind the scenes doing this one basic search to see if you're listed, and if not, oftentimes get denied. This is a big thing that will get you denied. So get the business phone number, get it to be toll free, get it listed with 411. Get a professional website and email address as well. Stay away from Wix. Stay away from the ones where they control your domain. You want to go to GoDaddy or wherever you want to go. I love GoDaddy. I think their customer service is awesome. Okay, so GoDaddy, I go to GoDaddy, I get my domain, I get my actual hosting there. Then you can go to Fiverr, you can go to templatemonster.com. You can go to all these places, buy a template, go to Fiverr, Upwork, have somebody put it up for you. Pretty easy to have a professional website done for less than $200. I'm not saying that's the way to go, right? There are UX, UI designers. There are people that will charge you $5,000 to $25,000 for really nice websites. It very well might be worth it for you. But I'm giving you that no excuse, less than $200 road to get it done. If you don't, you need to have a professional website set up. And you also need to make sure that your email is listed as the same domain as your actual website. Okay, look, it just doesn't make you look credible if you're not. There's no big, large, publicly or privately owned company that doesn't own their URL and their emails aren't that URL. It's the way that it is, right? So you've got to make sure that, like, my email is info@creditsuite.com. My domain is creditsuite.com. You got to make sure those things are congruent. Stay away from Gmail. Stay away from Yahoo. Stay away from AOL addresses. Look, I don't know about you, but I have not done business with people more than one time because they used a Gmail address as their business address. It's unprofessional. And I don't want to put my hands, my money, and trust into people that don't even have a professional email address. And this is the same way lenders and credit issuers look at this as well, just so you know. Okay, and John says, you have to, okay, I'll have to look at that. Okay, Corey and Eric says, is the automobile repair industry considered high risk? I don't think automobile repair is, but automobile sales is. So you got to be careful to keep automobile possibly out of the name, because automobile sales is, whether you look at the selling of just about anything, mobile homes, auto sales, any kind of vehicle sales is seen as high risk. Okay, so you got to make sure that, again, you set up the email address and the website address as the same. And again, make sure that hopefully it's your business name. So I don't even name a business or create a business if I don't actually own the actual URL. Okay, so sometimes you have to be creative because a lot of the URLs are taken. So Credit Suite, we bought that from somebody else that had that domain. Fundability, we bought that from somebody else that had that domain. We went and bought all their assets. We bought their social media channels. We bought the name. So sometimes you can't go to GoDaddy. If there's a name you really like, you got to hunt down the owner and you got to go to the owner. And both Credit Suite and Fundability, which is a fundability score we're building out to help you better qualify for funding. We went to, before we started using the word fundability, we went and bought that URL. We went and bought those assets from somebody else that owned it. Otherwise, we would have went with Lendability, and Lendability was available. So again, you got to make sure the name's available before you even grab it. Now you might say, hey, look, I can't find the exact name that I want. Well, then think of think of a name that doesn't reflect what you do, but still gives you what you want. So for example, one of my umbrella companies that I run a bunch of stuff under is called Stillwater Sterling. It's not high risk. Nobody knows by the name Stillwater Sterling what the business actually does. Okay, I got the domain because that's a unique domain or company name. Nobody had that already. So that's just an example of a name you could just make up. Okay, and it wasn't just something I just came up with. I had to go through a bunch of different names I liked to get one where the URL was available, etc. But it's an example of how you can do that to make sure you actually grab the URL. So business bank account setup. Okay, and if you're getting value, do me a favor, hit the like button, hit the love button, hit the share button. It's all I ask during this, is that if you're learning something that you're able to apply to better your situation, the only thing I ask is hit the like button, hit the love button, hit the share button. So that way we can bring more entrepreneurs into this and help more entrepreneurs get the money they deserve to have to grow really cool businesses. So let's talk about bank account carelessness. So look, in a lot of cases, when you go to get financing, they're going to ask for your bank statements. And this is the way I operate. When I fill out an application, every line item I'm filling on an application, I ask myself why the lender's looking for it, and I in my head think, is what I'm going to put here make me look credible? Same thing when they ask me for documents. When they ask me for documents, I don't just blindly send them documents. I think about, why are they asking me for these documents? So it really makes a lot of sense to understand why you're being asked to supply bank accounts. And I'll tell you why. It's because they want to make sure that you have enough money and access to pay back the loan you're borrowing, but they also just are looking for basic bank account management. Here's what they're looking for. One, do you have a positive ending bank balance at the end of every month? At the end of every month, do you show money in your account or a negative money in your account? Obviously bad when it's negative money. Nobody wants to lend you money when you don't even have any money left at the end of every month. So having a positive ending bank balance Very important. Not having a bunch of non-sufficient funds. You don't want to overdraw the account. If you're going to overdraw an account, set up overdraft with another account, like a savings account, so it never shows that it's an NSF. You don't have enough money, it pulls it from the savings and it puts it in that account. You cannot overdraw that account. When you start having a bunch of non-sufficient funds, lenders and credit issuers lose all confidence and it becomes very difficult to be able to get approved. And even if you do get approved, the rates are outrageous. Like the term is really short, the interest is really high, the payments are absorbently high. If you don't want that to happen, you've got to make sure that you don't have a bunch of non-sufficient funds. You want to make sure you have positive cash flow, not negative. That means that you've got more money going in the bank account every month than what is actually coming out. And they want you to have a lot of consistent deposits, not like real estate agents that might have 1 or 2, 3 deposits in a month. They want you to have a lot of consistent deposits. So those are the things that lenders are looking for when they're actually reviewing your bank account. You've got to make sure that you're doing that. And it's not a bad idea to grab your check system's credit report. Okay, a lot of people don't even realize that they have a credit score and report from how they actually manage their bank account. And you can get this, and I'll show you right now how to get it because we put this on our website. So if you go to creditsuite.com/check system, CHEX systems, I helped you. I gave you a huge shortcut. This is blowing up really big. I'm not that blind. I was using it to show something. Okay, so here we go. This is what we put together for you. Everything you need to access your check system's credit report, we put here. You can get your report for free. You can get your score for free. You can add a security freeze, lift a security freeze. You can add a security alert, or you can dispute with them all right here. This is so big of a deal for you to be in tune with what's on your check system's credit report that we created this whole page just to make it easy for you to do anything and everything you need to do with check systems. So all you have to do is go to creditsuite.com/check systems. There's no cost to any of this. And then access whatever you need, get your report, get your score, fix it. But you need to access your credit check systems because, again, this is a secret credit report and score that lenders are using to look at your banking history, how you manage your banking history, and determine if you should be approved or not. Another thing you want to do with your bank is you want to have multiple accounts. Okay, so there is something called a bank rating. It's a third type of credit score you have as an entrepreneur. As an entrepreneur, you have consumer credit, you have commercial credit or business credit. Okay, then you've got what's called bank credit. And bank credit, very few people know about. If you look this up online, you're probably only going to find my training on this because nobody talks about it because it's an internal thing in the banking system. So the bank rating works is that it looks at a lot of things. How much money you keep in your bank account on average, how you manage your bank account, like we talked about. It also looks at how many accounts you have open. Do you have money market account, savings account, a checking account? The more of these type of accounts you have open, the better it looks for your actual check or for your actual bank rating. And the more it looks like you are legitimate when you have 2, 3 different types of accounts open. So a checking account, savings account, money market account, those kind of things make sense. Before you ever go to get an SBA loan, you need to have a minimum of $10,000 in your bank account on average over 90 days. If you don't have that, don't even apply because you don't have a bank rating high enough to get a loan from the banking system. So a little piece of advice here. If you want more on the bank rating, go to youtube.com/credit suite. You'll see we have a whole training just on everything you need to know about that third secret credit score of the bank rating. So again, these are all the type of things that you need to do to make sure that you're managing that bank account responsibly. And you also need to make sure that you open it as soon as you open the business, because if you ever have a change in ownership in your business, they will look at the date you open your bank account as the start date of your business. So you got to make sure that you get that right. And again, this is taking a look at bank rating, but we already kind of went through this, keeping an average of $10,000 in your bank account, having consistent deposits, having, the amount that you're putting in the bank increase, showing the business is growing, that kind of stuff becomes very important. So not getting your personal financial house in order. Look, I talk a lot about business credit, but let me be honest. I mean, personal credit is just as important, if not more important. You need to have your personal credit in check. If your personal credit's not in check, get it fixed. What's wrong? You get it fixed. Look, don't feel bad because you have bad credit. We're entrepreneurs, okay? I don't know of any entrepreneur that I've ever met that hadn't had bad credit now or sometime in the past because we're risk takers, okay? So let me give you an example. I had pristine credit. I'm a credit dude. I've written the best-selling books on consumer and commercial credit, so I know a lot about it, right? Perfect, pristine credit. And then it was completely trashed. Why? Because my business failed. Okay, I didn't know about business credit. I personally guaranteed stuff. I made all the mistakes. So this is common. As entrepreneurs, we're risk takers. Our credit reflects that we're risk takers. Sometimes we take major hits on our credit as a result of stuff that happens in our business. That's why I teach you to separate consumer and commercial credit. There's nothing to be ashamed about that. I'm not ashamed. Okay, I took the risk. My credit took a hit. Now I've recovered. My credit's good again. I'm not saying it'll always stay good. Who knows what will happen? But the bottom line is when your credit goes bad, you got to get it fixed. And I'll tell you how to fix it. Go to get your LexisNexis credit report. A lot of stuff that's on your consumer credit reports comes from LexisNexis. Get LexisNexis, dispute and clean up LexisNexis first, and then go and work on TransUnion, Equifax, Experian. Work with a reputable credit repair company. I'm not in credit repair. I don't deal with consumer credit. Okay, but there's a lot of people out there that absolutely are in consumer credit repair industry that can help you, or you can learn and do it on your own. But fix and address any negative items on that credit report on the personal side. And you also need to add positive credit that will help you rebuild as well. You need to add high limit credit cards, even if they're like store credit cards at places that will give you high limit credit cards just to buy things in their stores. But you've got to make sure that you have that personal credit built. It's very, very, very important. So having good personal credit is definitely a very, very, very important step because, again, a lot of lenders and credit issuers will look at your consumer credit, especially in lieu of actually having your business credit built or not established. So remember the 5 things that make up your personal credit score: payment history, utilization, credit mix, length of credit history, and the 5th is new credit or inquiries. Payment history accounts for 35% of your total score. Utilization accounts for 30% of your total score. So think about that for a second. Utilization, the most important thing you could do for your personal credit is pay your bills on time. So if you have negative credit, you want to add more accounts you're paying on time because that's going to improve the biggest aspect of your FICO score payment history. The second biggest aspect of FICO score is utilization. What percentage of your credit limits are you actually utilizing? That's 30% of your total score. So let's just think about this mathematically. 35% of your scores, how you pay your bills, on time or not. 30% is utilization. FICO's telling us that having credit cards with a lot of available credit is almost mathematically equally as important as paying your bills on time. It's that big of a deal. And this is why when I used to help people in the consumer credit space, what I realized is that one of the best ways to improve consumer credit scores is get some of these places like Finger Hut or like My Jewelers Club. Now, My Jewelers Club doesn't report anymore, and I'm not sure the new sources that do, but these are sources that used to give you a really high limit credit line just to buy stuff in their store, but they reported it to the credit reporting agencies, and that one account getting added would massively spike your score. So if you don't have high limits, think about getting added as an authorized user to a family member's account that does have high limits and make sure they're paying those bills on time. Credit mix. You are going to be scored higher if you have 1 to 2 mortgages, 1 to 2 auto loans, 1 to 2 other kind of loans, and 3 major credit cards. That's the math that will give you the right credit mix. Length of credit history, you cannot backdate credit on credit reports. Trust me, I've tried. Doesn't work. The only way you can do it is to get added as an authorized user to somebody's actual account. My kids are a 9, and I'm thinking about it because they just changed birthdays. Cash is now 12, and Janelle is almost 10. She will be 10 this weekend. So 10 and 12, my kids have had their own credit report since they were 3 because I added them as authorized users. You can't do it now. Now they're going to ask for a date of birth, but back then they didn't. And so I was able to add credit card to my kids' credit reports, giving them probably 800 credit scores at this point and by the time they turn 18, they'll have that length of credit history. So you typically can't do that because if you add your kids as an authorized user, now they're required to get a date of birth. Back then you could, but what you can do is you can have somebody else, it's a family member that has a long-standing account, add you as an authorized user to that account. Last point of consumer credit is inquiries. Inquiries accounts for 10% of your score. A lot of people ask me, how much does an inquiry lower your FICO score? The answer is 0. It really doesn't. What lowers your FICO score is 2 things. Groupings of inquiries. Now, all mortgage or auto inquiries within a 30-day period only count as 1 into your score. But if you go apply for a bunch of credit cards, you're going to see your scores drop as a result of that. So groupings of inquiries, doing a lot of applying in a short period of time will absolutely lower that consumer FICO score. The second thing, most people do not know this, even in the credit space. FICO will score you lower if the inquiry doesn't result in a new account on your credit report. That is exactly why you shouldn't use consumer credit to be able to fund your business. Because if you go get a business credit card that reports on the business credit reporting agencies and use your consumer credit to get it, your consumer credit score will go down because FICO sees that you applied for something and you didn't get it. So that's the other thing you need to keep in mind for inquiries. If you do those things, then you're doing the things that you need to do with your consumer credit history. Okay. And let me go back in here. I got some other questions. I have the word clean spelled as clean, K-L-E-A-N, and my business name is Cleaning Business. No, cleaning is not high risk. But clean K-E-L-E-A-N, as you already know, requires an explanation every time you tell somebody your name. So something to think about. I love it. Adrien says, hey, Ty, is this live on 3/30/2021? It is, and it is currently 1:39 p.m. Katrina says, love it. John says, you have to discipline with your money. Very true. Corey says, thanks, crazy too. One of my banks shut me down because I was not using them right. By the way, I was like, begin marketing first before I gain clients. Yeah, exactly. And this is exactly what happened. But so I had the same thing. When Wachovia was a bank before Wells Fargo bought them, I had something in my name, I think credit in my name. They just shut down my bank account automatically because of my name. So that very common. It happens in the banking industry. And Eric says, does your personal credit matter when it comes to business credit access? It doesn't. And I'll talk to you about that in just a minute as we actually come in to talk about business credit building. And Corey says, hey, Ty, is this going to be ready for playback? It is. Corey, you're watching on YouTube. When this is done, it will appear on our actual YouTube channel. Okay, so back to loan deal killer number 9, no business credit. So think of it like this. You can't go get a mortgage, a personal home without having established credit. You can't go get a car loan without having established credit. You're going to struggle to get a credit card if you don't have personal credit established. What makes you think it's any different for your business? If your business has no credit report and score, you know how hard that is for you to go get loans and mortgages and car loans and credit cards? It's just as hard. You got to establish your business credit profile and score. When you build the business credit profile, they don't care as much about personal credit. If we look at Dell and we look at Michael Dell, right? There's a reason Michael Dell doesn't have to guarantee $100 million credit lines for Dell. If you look at Dell's credit report, the computer company, they have 135 plus trade lines on Experian alone. So when somebody pulls Dell's credit report, they see all these credit lines, all these loans, all these credit cards paid as agreed, good scores, and they give Dell money. They don't look at Michael Dell's credit report because Dell's credit report's established. Now, if Dell didn't have a credit report, then they would go to the owners and look at the owner's credit report in lieu of it because this doesn't exist. That's what's happening in your world. And if you want to get away from personal guarantees, I'm not saying you always will. A lot of loans, a lot of credit lines, they're always going to need a guarantee. You're always going to need a guarantee for an SBA loan, for example. But credit cards, in a lot of cases, in some loans, even credit lines, you can get away from guarantees altogether once you establish this business credit report and score. It's really important because if you build this, they're going to not look at the other stuff as much. The name being off, your address being off, that stuff's not as important if they pull a credit report and see a 90 score and 15, 20 trade lines on there, because your business has a track history of paying its bills. It's very important. If you don't have a track history of paying your bills, all the other things that we've talked about become even more important. So go get your DUNS number from Dun & Bradstreet. It's 100% free. You can go to creditsuite.com/reports to do a free search with the credit reporting agencies to even see if they know you exist now. They will give you a failing report and score if they know you exist and you have no credit. Another reason you need to build business credit is to give you a failing report and score if you have none. So you've got to make sure you go and do a search to see if you even exist in their world, creditsuite.com/reports. You can also go to creditsuite.com/DUNS, D-U-N-S, and get a quick link to go get your DUNS number for free. You can go to DNB's site as well. I don't care. I just made a shortcut for you to get there faster at creditsuite.com/DUNS. Get your DUNS number. A lot of sources really look at this as a sign of credibility, and you can't get a Paydex score with Dun & Bradstreet until you do this. Now, you need a BEN number from Experian as well. You'll get that automatically the minute you have an account actually report to Experian. Okay, so again, you need to make sure that you establish some business credit. Not having any established business credit is a problem. Even worse is having bad business credit. And bad business credit is pretty easy to get. You don't have a lot of accounts in your business credit reports, and some of them are negative. If you have that happen, that is going to create a bad business credit report for you. So you've got to make sure that you fix any kind of negative items on your business credit report. How do you do that? Okay, you can easily do that by coming in and pulling a business credit report. You can go to creditsuite.com/monitoring. It's only $24 at creditsuite.com/monitoring to get your reports. If you see a negative, then you want to get either credit monitoring with Experian or Equifax, wherever the negative is, and dispute it through their credit monitoring. If it's on Dun & Bradstreet, they have something called their dashboard. You want to go to Dun & Bradstreet's dashboard and dispute it with Dun & Bradstreet. So you want to go and dispute any negative information that you have on there that looks to be inaccurate so you can get it removed. And finally, you need to come in and make sure that you've actually established business credit, because having these business credit scores goes a long way to getting you approved for credit financing. If you don't have established business credit, you cannot get an SBA loan. The reason is the SBA loans use a score called FICO SBSS. It's your FICO small business score. You have to have a 140 score to get an SBA loan, minimum. A lot of times it's like 150, 160. It's mathematically impossible to have a 140 score if you don't have business credit established. You just can't do it. You have to have business credit established to even be able to get a FICO SBSS score high enough to get an SBA loan. So you've got to start building business credit. You've got to come in and use places like Uline, Quill, Granger, Crown Office Supplies to get initial reporters or starter vendors that report, pay those as agreed, and then continue to build. Go to retail credit and get fleet credit, and go to Visa card, MasterCard, auto financing. This isn't the training to teach you that. You can go to youtube.com/credit suite and easily find we've got tremendous amounts of training that walk you through the actual steps of building business credit. But you've got to make sure that you build business credit. And in order to do that, you've got to start monitoring your business credit to see what's on there, fix any of the negatives while you start adding positive accounts to your business credit reports. So that's 10 different ways you can make yourself more fundable. Make sure that you set up a name that does not indicate that you're in a high-risk injury. Set up your phone number the right way, the address the right way. Make sure you set up your entity the right way, preferably a corporation. Get an EIN number, get a DUNS number, choose your NAICS code, the one that hopefully doesn't indicate that you're in a high-risk industry, and use it every single time that somebody asks you what industry you're in. Get your business credit reports. Dispute any negative information on there that's not accurate. Build your business credit. Manage your bank account responsibly. If you're doing all these things, you're going to be considerably more fundable. It's going to help you get a lot more money, a lot more approvals, and get better terms as well. Okay, and Peter says, how do you go about the business loan when you just got your business license? Well, when it comes to getting business financing, I call this the 3 C's cash acquisition formula: credit, cash flow, or collateral. One of those 3 things is typically needed to get a loan. If you're starting your business, you don't have cash flow. I always take the middle one down first, so it doesn't end up that my middle finger is the one left. So if you always see me stall when I'm counting like that, I'm taking the middle finger down first, so it never accidentally ends up that one's the one that's left up. So credit is gone. So now we have cash flow is gone. Now we've got credit or collateral. So you can qualify for financing using your good personal credit or a guarantor, family member, friend, somebody that wants to use their credit. You can also qualify for financing using all kinds of collateral. So you can look at stocks, bonds, 401ks, IRAs, equipment, inventory, purchase order, account receivables, real estate vehicles. Any of that can be used as collateral to get you financing. You can also use crowdfunding. You can use grants. You can use angel investing as a startup. You can also build business credit, all of which you can go to youtube.com/credit suite. Just look at whatever it is: crowdfunding, angel investing, grants. Search any of that stuff, and you'll find a training we've done that will teach you more cool ways to be able to use those things to be able to get money. PD. So hopefully that helps. Corey says, hey, Ty, I'm currently set up with your business credit program. Awesome. But I had to step away momentarily because my funds were lacking, but I'm back on track now. I know business credit might be negative now. Well, Corey, go to creditsuite.com/monitoring, see what's on your business credit reports. If you need any help, give us a call. Just because you're watching this training, you're entitled to a free consultation with us. On this consultation, there's 3 things that happen. 1, we do a fundability assessment to see where your fundability is jacked up and what you need to do to fix it. We help you fix it to become more lendable. 2, we help you access your business credit reports for free. No money. We will help you get them from Dun & Bradstreet, Equifax, Experian. They'll charge you $250. We charge you nothing. And we'll give you tips and tactics to fix and improve that business credit. And 3, will qualify you for financing. There's a lot of financing that like PD and a lot of you might be able to qualify for that you don't even know about. But if you give us a call on that consultation call, we'll pre-qualify you for all funding you can get. We work with every legitimate funding source, over 1,000 funding sources and every legitimate funding program. So we can tell you all the funding you get. So you can give us a call and see what's going on with your business credit. Any of you can do that. And also make sure you go to creditsuite.com at the top right of our page, access our social channels. YouTube has hundreds of training videos. We've got daily tips on Instagram, on Facebook, on Twitter. We've even got a podcast called The Business Credit Financing Show that's going on 500,000 downloads. The reason it's so popular is it's the only place that I bring people in and interview them about how to grow a successful business, how to sell your business for maximum value, how to handle your accounting, how to do SEO, how to market your business, how to build systems, how to outsource. Those all the things that I interview experts for on our podcast. You can access all those social links at the top right of our page, creditsuite.com. And Corey says, I'll begin that this month. Great. Thanks for tuning in. Thank you for liking, loving the video, and sharing. It means a lot to me. I look forward to seeing you on our next training where we talk about more cool ways to get money to grow your business. Make sure you like this video, love the video, or share, and make sure you subscribe. If you're subscribing on YouTube, click the bell beside subscribe and click all so you'll be notified when we go live. Thanks for tuning in. Have a great day. I look forward to seeing you in our next training where we talk about more cool ways to get money and grow your business.